All right, I got Beds back on the podcast to talk about some mortgages, pal. You ready to roll?
Beds is back. Beds is ready to roll. Is Randy back? Is Randy ready to roll?
Yeah, I'm ready to roll, dude. You were at Samoset for a few days. How was that?
It was actually really good. It's the annual trip we take. Weather was perfect until the last day. We had some rain, but that was okay. Golf was really fun this year. As I get better at golf, I want to conquer courses like the Samoset, as opposed to just, playing golf for 4 hours and just hating everybody.
Yeah, yeah.
And just, you know what I mean? That was the routine for so long. Now it's fun to play a good course while you're playing better. I did not score well, but I played well.
That's nice. That's a fun course, especially that like 3 or 4 hole stretch on the water. Some of the best.
It's beautiful.
Yeah. So I played in a tournament yesterday in the rain that you were talking about, and it was absolutely freaking brutal. So
Dude, I'm not a rain guy when it comes to golf. I'm good.
yeah, I don't need to fight through the rain. Like I was sneaky hoping the tournament would be canceled yesterday, but I knew it wouldn't be because this one was for UNE football. I had a client who's the head coach over there. So I've been doing it for the past like 5 or 6 years. And I know it's like a fundraiser for them and they need this money. And it's like, they're not going to just cancel it. And so we were playing in some pretty steady rain at certain points. I was soaked by the end.
Yeah, that's miserable. I'm out. I'm out on anything like that.
Yeah. So, all right, dude, want to talk some mortgage stuff? There was a Federal Reserve meeting last week. What happened at that?
Maybe I guess the answer is sort of some of the same stuff as the prior meeting, right?
Yeah.
How'd you feel about it? I thought it was like a big nothing burger.
Well, yeah, I think it's kind of in that zone of like what I expected. They're not in a position to lower rates. Raising rates seems like it's more likely than anything, but they just kind of left things unchanged. But I guess there was some language around the potential to raise rates if inflation data doesn't improve, which end of the day didn't really move the market too much last week and into this week. We're still at like 12-month highs, so it's just kind of whatever.
How do you feel about this thought? It's interesting because as the data comes out, the year over year was down with inflation, right? There's this constant threat of the thought process of inflationary pressures because of oil going up, and we haven't seen it yet. I'm going to be curious about this Iran run that we're having and when and if it actually does hit, because since inflation has, in my view, been tame, this threat behind the scenes continues to push mortgage-backed securities up, which from my seat, and I'm sure from yours, is super annoying.
Well, yeah, it's been an annoying past 5 months, that's for sure, 5 or 6 months. So
Yeah.
yeah, we'll be interesting to see how it plays out, but really not much since last time we did a podcast. There is some economic reports coming out later on this week. I think there's some employment numbers coming up on Friday, non-farm payroll, unemployment rate, average hourly earnings coming out on Friday. So that can move the market one way or another. I guess the consensus is that they're expecting 100,000 new jobs to be added and the unemployment rate to be 4.2%. So anytime, it's all about like what the numbers come out at versus what the expectation is. So if those are the expectations and it's just worse than that, even slightly, that could affect the market.
As you were talking, I was looking at the calendar. So Wednesday, non-manufacturing, it's kind of a big one. Thursday is a slew of big stuff. Friday also. You know what I'm going to guess? I'm going to guess that the private sector continues to improve in the jobs numbers. The government stuff is going to be stagnant. I don't think that's going to help the number at all. I bet Thursday, Friday is just sort of maybe a slight up and down with the trading of mortgage-backed securities, which means some good, some bad, some average numbers within all those reports. What is there? 2, 4, 6, 8, 10, 12 of them starting Wednesday. So we'll see what happens though.
Right now, the average interest rate for the 30-year fixed in the market is 6.77%, according to mortgagenewsdaily.com, which is one of those big websites that we refer to just for like general data. Everyone's situation is a little bit different when it comes to interest rates, but that just gives you a sense that rates are in the upper sixes. 15-year fixed, that average is 6.3%. So yeah, numbers are high, man. It's tough to tell those numbers to borrowers still. I think a lot of them still think they are lower than that, when in reality, they're not quite.
An interest rate thought that I have is tied to like the stuff that I've been seeing recently with the 40 and 50-year mortgage stuff coming back up again. I don't know why that keeps coming back, and I don't know if there's any validity to it, but it's like last couple days in my feed, and I bring this up because of affordability, right? As rates go up, we worry about affordability. Everybody else worries about affordability. If we do have a 50-year mortgage, I'm going to be curious about the mechanics of it. So
I'd be surprised, dude.
Yeah, I just
There
don't.
seems to be a lot of bad press about those longer mortgage stuff. I feel like people would be adverse to doing that, but I could be wrong.
Yeah, we'll see. But Random sidebar on that.
So yeah, rates continues to be a big conversation piece. I don't want to talk much more about it beyond that. Obviously, anytime there's a Federal Reserve meeting, it's something that it's worth talking about, especially when we're doing a podcast at the same time. So that's what happened. That's kind of where we're at. Rates are high. We'll see what happens in the weeks to come. That fair in rates, unless you have anything else to add.
I'm going to put it into the universe that I want interest rates at 5.75% within the next 6 months. Preferably, let's do it right around Christmas time, so we have a mini refi boom and everybody's happy.
Just put it out there, man. Manifesting it. I like it.
Yes.
So the rest of the podcast, I have a bunch of questions I want to run through with you. Just kind of like scenario questions, things that we come up with every day or come across every day. And I want to see what your thoughts are on them, and I'll kind of chime in on my own thoughts with them if you are ready to roll.
Let's rock.
Okay, so this will be the type of question it is. Do this for a little bit and then wrap it up. So what's the biggest mistake you're seeing buyers make before they even get under contract?
So I think with things so technology is so important in our industry. And I think earlier in my career, right, we used to do our applications. Now it's more driven where the consumer does it. They just hop on an app, they hop on their desktop, and they put in their information. What I think is a downside to the technology part of that is people misrepresenting their income. And it's a very big pet peeve of mine. So a mistake that I think borrowers could stay away from is actually overinflating their income. It is not of a benefit to inflate your income, because ultimately at the end of the day, it's going to be caught and it could affect your pre-approvals. Randy, your thoughts?
Well, my thoughts on that specifically is like, if I think it's going to be tight, it actually ties into one of the things that bothers me. And it's borrowers falling in love with homes that are out of their budget. This happens a lot for people. It's like, hey, your limit's like $450, and then it's like, well, I found this place for $475. Can we make it work? It's like, no, dude, you just don't make enough money. But or your debts are too high, or there's some other factor. But I think people overinflating their income can be sorted out through going through an actual pre-approval versus a pre-qualification. Like if it is very tight, if people do want to go right up until the max that I tell them, it's like, let's do a pre-approval. You might have told me your income is X when we first started, and I find out it's Y when we go through the underwriting process. So it's like, once we do that, we can establish a firm max, but even then borrowers still tend to go above that max, or at least in some cases.
I looked at an application last night that was really tight with DTI. They needed a letter to write the offer, but they could not get me their documents until the morning for whatever reason. I just didn't send the letter. I'm just not going to do it anymore. I've been bitten by that so many times, so that's my pet peeve.
Yeah. Another thing too is this is like borrowers that you have pre-qualified, and they just haven't found anything for a while, and they kind of fall off the table. Like they just disappear.
Yeah.
But then they come back like hot and heavy like 6 months later, and they like want to see a place, that day, but they haven't like updated anything. It's like, it's like it's tough to be like, hey, what's up? How you doing? I want to see a place tonight. Can I make an offer? It's like, well, dude, your credit report expired. Like I haven't looked at like how your income may have changed. I haven't looked at anything really in like 6 months. You haven't responded to any of my emails, so or texts or calls or whatever. So like, I think staying in good communication through that home search process would be great. Yeah.
Would it hurt people at all to get better at just saying, Randy, thanks for the emails right now, we're on the back burner, just so Randy knows, right? It's a communication thing. And look, this is the pot calling the kettle black. I love to Belichick the snot out of everything. But man, how many times has this happened to me? It's innumerable is the answer.
Yeah, it happens all the time. And then it's like, I have a 3-hour drive ahead of me, and someone's calling me and saying, hey, I want to make an offer on a place. And it's like, okay, next thing. What's something buyers do during the loan process that makes you immediately nervous?
I mean, I guess the obvious answer is applying for new credit, right? But
I think that's like if this was like Family Feud, that would be like the number one, I think.
Okay, how about this? So let's go down the list in the Family Feud equation. I don't like it when people move money around.
Yeah.
Why?
Yeah.
You've got money in a primary checking. For whatever reason, you're going to put it in your secondary because you want to use that to pay for something during the loan process, or vice versa. You know what I mean? I don't know. That one always gets me because you have to document it.
So 2 things that we got going on there. But the adding new debt piece, that makes me nervous for certain people where they're very tight in what they qualify for. Adding $5,000 in furniture purchases could be the difference between qualifying and not qualifying. For certain borrowers, that's like a no-go at all. Like, don't do that. Like, the best borrowers would be the ones that would check in with you before doing that, and you could just say, like, just wait 2 more weeks and you're good. but sometimes people just do it on their own. So that's like number one. Number two, like the moving money around piece, as long as it's not cash deposits, I would tell those people, like, you can move your money around if you want, but like be prepared to just to document it. And almost kind of like setting the expectation that it's like, you can't be mad at me when we have to ask you for a bunch of statements showing the money being moved around. You know, like it's fine to move your money around, but you're creating a headache for yourself, and like it's not me to blame for that piece, you know, obviously in the nicest way possible. But like that's what they're doing, is just creating a little bit more work for themselves.
Yeah, and for us.
Another thing too is people changing jobs. Doesn't happen too often, but like it's definitely happened. If someone like changed their job midway through a loan application process, that would be nerve-wracking. Like, you know, your hourly rate going to change, your salary going to change. Did we use overtime from your previous job and now we can't use it from the new job? Like that has and would make me nervous if that kept happening.
So the mechanics behind that is like most of our mortgage products, or most of the industry's mortgage products with their guidelines, require us to have an updated pay stub with 40 hours on it within 30 days of closing. So if somebody is going to change their job, that pay stub, the mechanics of the timing of the pay stub is what I get nervous about in that equation. Yep.
So next one.
Yes.
Not that different, but there's some room for it to be a little bit different. But if you could make every buyer follow one rule from pre-qualification to closing, what would it be?
You know what? You answer yours first, because I want to think about this for a second.
So for me, it would just be responding quickly. And I don't mean like urgently, like you have to get back to me within 30 minutes of some time, like either me or Jen or Emily requesting something, but it's like, you know, don't just let things sit. You know, the people that have the best experiences through a loan application process, the happiest at the closing, the happiest after the closing, are the people that just stayed on top of things. And when we requested something, they just got it back to us in a fairly quick manner. So that would be my biggest thing.
I like that. I like that. I think that would be my biggest one, is just when a request comes from us, please just respond to it. Just respond to it. And if you're going to respond to it, please don't have the answer of, I can't get that. Can I get you this? We're typically asking for stuff that you can get. So just grind, just do it.
I love your face when you said it. We are typically asking for things that you can get. We're not really asking for things that are impossible to get.
Yeah. Yeah.
Like this isn't like we're pulling this out of thin air and trying to make you work. Like we're asking for this because there's a reason we're asking for this.
It's funny too, because you've had this before. You have the customer that likes to create that semi-negotiation with you just to push back on you to see if they can like not work hard, you know?
Yeah.
Yeah.
Totally.
Yeah.
I had a borrower this week and I was talking to Emily about this. Borrower says, because we asked for, I don't know, something about their retirement plan. And he's like, I have so much equity in all my properties that I own. Why do I even need this? And it's like, dude, like that's not a thing. like just because you have equity in your properties doesn't mean that you don't need the things that we need. Like if I didn't need these things because you had a bunch of equity on your property, like I wouldn't ask for them. You know, like we need them or we can't sell the loan. Like we can't close the loan if we don't have these things. So it's always funny the way certain people's brains work through the underwriting process.
Yeah, it is interesting. I've gotten that quite a bit over the years. The equity stake with people's assets, either something in the bank or retirement or investment firms and their real estate, that is a very big prideful thing for some people. You know?
100%.
Yeah. I mean, that's something people should feel good about. And they just think organically, I feel good about my asset amount. You guys should also.
Yeah, you guys should give me the loan, no questions asked, because I have $2 million in equity in my rental real estate portfolio. It's like, nope. Doesn't work that way. Doesn't work that way.
Well, and I think 2008 or whatever, 6, 7, 8, 9, prove that number is just a number until it's like, wow, oh my God, that number just went down 70% in 5 minutes.
Totally. So always funny. How about this one? What's one mortgage myth that just refuses to die?
The first-time home buyer scenario.
What's up?
So I think a lot of parents that bought houses in the early 80s continue to tell people about the first-time home buyer incentive, the special features, interest rates that they had back then. It is so funny to me how many times that statement comes up with the thought of, do I get a lower interest rate?
Yeah. And it does work for main state housing loans if you're a first-time home buyer to get a $5,000 credit towards your closing costs.
Yes.
But outside of that, being a first-time home buyer doesn't get you anything. It allows you maybe to get a 3% down conventional mortgage instead of 5% down. Maybe that's a benefit, but there's no scenario that your rate improves really because of it. So it is an interesting thing when people throw that out there. for us to just have to kind of navigate through that in a way that like we appreciate that you're a first time home buyer, but like it's not like such a game changer that you're just going to get a rate way lower than everyone else's with like way better terms.
Isn't it funny though, Randy's like one of your biggest purchases? Some people organically think, give me without
Yeah,
earning it. Without earning
yeah,
it. Yeah.
for sure.
Yeah. And I'm not crapping on that. It's just interesting. Yeah.
I've seen that a bunch over the years. Another one for me is that certain people still think they need 20% down to get a mortgage. Not many. I mean, there's a lot of people that have awareness of low or no down payment loans. But I do encounter people once in a while, or like a realtor that, thinks that you have to have a big amount of money to put down. It happened not that long ago for me. And that's just something I always want to be clear about with people, that you do not need 20% down to buy a home. There's plenty of 3% down, 5% down, no money down options to get into a home nowadays.
So that actually comes up for me also. I hear that comment quite a bit, the 20% down. You don't need 20% down? It's like, no, no. There's quite a bit of marketing too on the fact that you don't need 20% down.
Yeah.
Yeah.
Talking about this for 20 years,
Yeah.
So this isn't a new thing to not need the 20% down. It's been that way for a while. The thing that putting 20% down gets you is PMI. There's no PMI. So that's maybe where people get confused, but that is the big thing that 20% down gives you. The thing, I guess another myth that comes up a lot is just the idea that PMI is a bad thing. I don't know if, like, I have some people that like they so badly want to avoid PMI, when it might make sense, like, so they want to avoid PMI, put 20% down, but it might just be better for them to put 15% down, not spread themselves so thin, and that PMI ends up being $30 a month, and it goes away in a few years when your equity naturally gets to the 20. So it's like people just like draw this line in the sand. I don't want to pay PMI, and I don't think they realize how in certain cases, if they have good credit and still put a decent amount of money down, that it's just not that expensive.
A random thought that I have tied to that is I actually love it, and I think this is our experience now, is like we'll look at the 15 versus 10 versus 20% down. We'll look at the self-insured options. We'll look at, does it make sense to give somebody monthly MI instead of the self-insured if they're only 5% away from 20% equity? I always love it when I'm sort of cooking on this topic with clients and they're actually locked in and focused on my advice, because I do think after all these years, especially with your history now in the business, I actually think we have a leg to stand on when we're telling people which way to go with this.
Yeah.
Yeah.
Yeah. So that's a funny one. Other thing for me is the idea that getting your credit pulled is like a devastating thing. Like, does your credit go down a little bit when you have your credit pulled? Yes, in theory, I guess. But like people are like so adverse to having their credit pulled because they think their score is going to drop from 800 to 600 off of me just pulling your credit to see if you can qualify for a mortgage. It just doesn't. That's just not the way it is. The system's not looking to penalize you because you're thinking about buying a home.
Another thought I have is the credit score modeling between the three major agencies. So they technically update towards the tail end of the month. The free credit reporting scenarios like Credit Karma and other ones that are attached to credit card companies, they've really conditioned people to think that credit scores change daily. They actually don't. I spend so much time talking about the differences of a traditional credit pull versus Credit Karma. It's not that it annoys me, but it's really weird to try to explain to somebody what you're seeing every day is actually not what we see. Do you run into that?
Only like every freaking second of every day, like it's like, I think like the credit cards, the Credit Karma and Credit Wise and all these things that give borrowers access to their credit score model or a credit score model is like the best and worst thing, because it's good for people to have a sense of where they're at, maybe something that they can track over time. Like if they're using Credit Karma, they can see that their score is 780, but then next month it's 700. It's like something happened, and it can cause them to go figure that out without having to have a hard pull. But like those scores are not accurate to what we're pulling on the mortgage side of things, and that causes a lot of distrust for people. I find, I have to like share articles about it, just to kind of try to give people some comfort. And even then, I don't know if it works. Like, I don't know if they're still like, yeah, Randy's full crap. Like, he's using some fancy model that makes it worse for me, and now I have a worse interest rate, so it's just, yeah. I don't know.
Yeah. And the additional thought tied to that is we're on a 350 to 850 scale on the mortgage side of things. A lot of those Credit Karma scenarios are 4 to 900s or 500 to 1,000. So it's like you're always, I don't know, what's the math on that? 10 to 15% off between that score model and the one that we look at. So that's another conversation that comes up.
And when you say we, that's not Chris and Randy at CMG. That's just the lending industry.
Yeah.
across the board. They're all the different lenders are using the same models that we are. It's just those other models that you reference with the different ranges, those are for different things, but not getting a mortgage.
So, Credit Karma. Sick of it.
Get out of here.
Yeah.
Get out of here.
Yeah.
All right, you might not have an answer for this, so I'll jump in if I have to. But what's something buyers obsess over that really doesn't matter, and what's something they ignore that absolutely does? So anything come up that they obsess about that doesn't matter as much, in your opinion?
Wow. That's a really good question. Go ahead. That lead off with that.
Yeah, so I don't want to. Oh man, I got to think of the best way to put this, but like
Dude,
I don't want to dismiss like someone's concerns about interest rate, but like getting concerned over like an eighth of a percent, I don't think people realize that they're not going to have this mortgage for that long. And it's not that big of a difference in certain cases. And not because we have 8% higher rates than anyone, but just the fact that the market may have moved on one day-to-day basis or a week-to-week basis from when they had their pre-qualification to when they went under contract. And now rates are an 8% higher. It's like, I don't know. Sometimes it just kind of is what it is. You're not going to have this rate forever. It's $20 a month higher. It's a cup of coffee a week higher. It's just, it's just the way the market is. And, I wouldn't lose a ton of sleep over that 1/8 of a percent difference if things varied. If we're talking a percent, obviously that's a big deal, but an eighth isn't a huge thing, I think, a lot of times.
So I think just to be different, I'm going to talk about the appraisal, the appraised value, but I do want to piggyback one thought with interest rates is I think the marketing of interest rates creates such a headache for us when we're working with people in regards to them worrying about the eighth of an interest rates. Not a lot of people understand what an APR is when it's attached to an interest rate. And all of these flash advertised lower interest rates create all of these conversations that we have to have. I was trying to be different in the answer, but man, it's an innumerable amount of times I've had to talk about an eighth of an interest rate. But so appraised value is one that I seem to deal with. Now that the market is a little different, right? So it's not the last 4 years, but it's still got some characteristics of the last 4 years. People are worried about what they're paying for things. And I think people have obsessed about appraised value over the last couple of years. I deal with that a lot.
Mhm.
Is that a bad thing? Absolutely not. They're buying an asset. They want to know if it's going to appraise. The second tier to that is when they are obsessing about that, then we have to go down the rabbit hole of how renegotiation works. If a seller doesn't want to renegotiate, how you have to fill the gap in the loan to value if an appraisal does come lower. But yeah, I do talk a lot about appraisals.
Yeah, that's interesting.
Yeah.
One thing I think people ignore that they maybe should pay a little bit more attention to, and I've been more aware of it over the past couple of years, is having an emergency fund for people. Like I don't think people think of that as a thing. Most loans don't require it. Like there's plenty of people that can get a mortgage and they can deplete their checking savings account down to nothing to close on a home. But I do think people don't think of that as much. They don't realize that there's deferred maintenance or things that can come up, and I can't tell people like no, I shouldn't impose my personal beliefs on someone's willingness or wanting to buy a home. Someone wants to buy a home and they want to spend every dollar that they have to come up with the down payment and closing costs. Like our job is to do mortgages, and like if our job isn't to be like you shouldn't do this, because they're certainly allowed to. I think there'd be some type of like discrimination issue if we did that. But I would love to see some people think a little bit more about the fact that it's expensive to buy a home beyond the monthly payment, and they should have some money set aside, whether it's 1 month of expenses, 3 months worth of expenses, but something.
I love that thought. Everything about that. I'm a big squirrel away money guy. Like I still think I have the first nickel I ever made.
Are you freaking working back in the 20s? Jesus Christ. Freaking got a nickel for an hour's worth of work.
Hey, can we go to the 20s real quick? I think I would have fit perfectly in the 20s.
You would, yeah. You're definitely like a old school kind of dude.
Yeah, yeah. I'd be the guy with something in my pocket, nice suit, making some decisions.
Yeah. I can picture it now.
Yep. Okay.
All right, last question I have. If someone listening plans to buy a home in the next 6 months, what's the first thing they should do tomorrow?
Two things. Number one, your credit score is so important. So your balances on the debt that you have now dictate those credit scores. Please keep your balances low. If it's a $200 max credit limit that you have on a Target card or now the Circle card, don't keep a balance over 33% because you're actually hurting yourself when it comes to mortgage financing and interest rates. So keep your balance down. That's my short answer. How about you?
Yeah. I think mine ties into that. It's talk to me or you, and figure out a game plan. Like you might want to buy a house in 6 months. You might be nowhere close to buying a house, and you have 2 years worth of work to do to improve your credit or save money or build up some time as a self-employed borrower. Have 2 years to actually like. You should talk to one of us now and see where you're at. Part of that is running credit. We would tell you if your credit score is not good enough and all the stuff you just said about balances and those ratios with limits and stuff like. But the last thing you want to do, and it happens all the time, and I kind of alluded to it earlier, is like, I want to buy a house. I want to make an offer on it tomorrow, and I haven't talked to anyone yet, or I haven't talked to anyone in a long time. And it's like everything is like rushed, and there's people that sometimes reach out to me, and it's like, dude, why didn't you call me a freaking month ago? You know what I mean? 2 months ago. I would have been able to lay it all out for you. We have a plan. You could see a house this weekend. You could text me. Yep, works, pre-qual letter, all that stuff. But instead it's Friday night, 8 o'clock, and you saw a house just at Zillow and you want to rush and go set up a showing, make an appointment, make an offer, all that stuff. Like, I think like the first people you have to talk to is us. Get your plan and then go from there.
You really need to let your guard down to do that. And I understand why some people are not good at that, but you're not good at that actually makes what we're talking about very extremely difficult from a timeline standpoint. Just as a random example, if you have let your guard down, let's say your credit score, well, let's say I'm looking at a credit report and it's just clear as day. If they took $1,000 out of their savings and paid down some balances on 3 credit cards, that their credit score will be up at least 40 to 50 points. And that's like a difference of a quarter on an interest rate.
What's maybe the difference between qualifying and not qualifying?
Dude, what is the mental aspect of that, of just getting past that hurdle and allowing us to cook so we can save you on your interest rate? So it's weird. It's weird how people can't break through that. I understand why, but that is a big part.
Yeah.
Yeah.
Anyways, that's all the questions that I wanted to run through today. Any big wins in the past month since we've done a podcast? Any deals that are worth sharing?
You know what? I think just the relationship building that I've been focused on has been something that I've been like very upbeat and positive about. The market for the last 30 days for me, I went through a 0 for 11 run with people writing offers. So it seems like the last 30 days have been super competitive, but I'm just happy with relationships right now. How about you?
All that stuff is true, and I'm right there with you. I did have one deal that I think is worth mentioning. Got a referral from some new people I've been working with, and borrowers very well qualified from all aspects of their personal finances, except they had like a $40 or like a late payment on a $40 home equity line of credit that like wasn't closed out or something like that. Credit dropped to like 580 something. And it's like, what are you going to do? Right. So all of our normal type of loans that we would do for someone buying a second home in Southern Maine are out the window. So I call one of our local banks that we broker to and ran it up the chain of command. And like, these people have millions of dollars, make $600,000 a year. Debt to income ratio is like basically nothing. This mortgage payment is like a non-issue for them completely. But their credit score is 580 something. Can we make this happen? And plus they're putting like 40% down, hundreds of $1,000s down. So ran up the chain of command, got the prior approval to be okay with them making the offer, going under contract, and then it was just a normal loan after that. It was great. So
awesome.
I would say like we have options to make things happen where other people would just kind of raise their hand and be like, nope, can't do it. Sorry, your credit score is terrible. Like, we can chase that down a little bit, and we typically have someone that can make these deals happen.
I like the fact that you went down that rabbit hole, because at the end of the day, that made sense. It made sense. It's just something stupid that happened. Good job. That was a really good one.
Yeah.
Good job.
Yeah, no, they were thrilled. I mean, closed, I think, last week. But yeah, it made sense. And I think we're in a good position to know when something makes sense. That's a good way to put it. Because it's not like their ratios are super tight. It's not like they were trying to put the minimum down. They didn't have this long history of derogatory credit. It was just like this one very specific thing that was clear as day if you looked at the credit report. But it shows you how important it is to make payments on time. Other people would have just probably said, hey, you can't buy this house, and then they never would have bought it. Luckily, they stumbled across me.
This is interesting too, because the only blemish that I ever have or have ever had on my credit was a mortgage late. And actually, it really annoys the snot out of me that it happened. When we divorced, Liz and I had to refinance. My mortgage being refinanced was a Countrywide Home Loans mortgage. So I refinance it. Blah, blah, blah. I don't know. Years later, I'm going to get another mortgage, and I see that I have a late on my credit report. So I'm looking at that. I'm like, I've never been late on anything. I have not been late on anything. I was late on that. After I reverse engineered it and remembered my closing date, my payoff got to Countrywide a couple days late, and it made it 30, I think it was like 33 days, coincidentally.
Of course it would be 33 days.
Yeah. Yeah, so that's actually the only blemish on my credit, and it's still to this day when I see it way down on the list on my credit report, I just shake my head like, come
It is
on,
annoying.
really?
It is annoying. Definitely happens. So, all right, dude. Well, hey, that's it for me. We will do it again next month. Hopefully, it's a month of low rates, like you said, on our way down to 5.75.
Like Christmas, baby.
All right, buddy. We'll talk soon.
All right, guys, thanks for watching.